Hello traders, Joseph here again. Thank you so much for joining me on yet another edition of my weekly video. First of all, I want to apologize for not being able to put out a video last weekend because I actually received a few emails from a few people asking me why I did not upload a video on YouTube, which is kind of nice to see. I mean, it's good to know that some of you out there take your time to watch this video every weekend. So yeah, I'm gonna try and catch you up on what's been happening, what's been going on obviously in the last 2 weeks, and I've actually got a technical, an in-depth technical analysis today on the euro dollar. That's what I'm going to be looking at today, and I'm also going to try and catch you up on what's been going on with my signal service. Yeah, so I mean, if this is the first time you're watching this video, I want to welcome you. Thank you so much for tuning in, and as always, if you like what you see at the end of this video, then please by all means hit that like button, subscribe, leave a feedback, a comment or anything that helps really, and I greatly appreciate your support. So anyway, I'm gonna head over to the chart today. So like I said, I'm gonna be looking at the euro dollar, and I'm gonna be doing an in-depth technical analysis basically. So what I'm gonna do is, as always, I think if you guys have seen my videos, you should know how I do my technical analysis. It's usually starting off with a higher time frame and try and work my way down to a lower time frame and try and construct a trading opportunity based on what the structure of the market is, because obviously you have to be able, as a technical trader, you just have to be able to read a market chart and be able to build your trading strategy around that market structure. So the first thing I'm gonna do is I'm gonna bring in let's see what this market has been doing. So looking at this picture from here, from this previous, we had an impulse leg, and then we had an outside return, and then we had another impulse leg forming a new structure high. So if you know market structure, this is what it's called. You call this a bullish structure, but that it doesn't mean that the market is bullish once you see a bullish structure. No, by all means, it doesn't mean the market is bullish. Bullish structure is just a bullish structure. For a market to be bullish, you have to see at least 2 or 3 bullish structure combined together. So looking at this, we saw the market made up of formed a bullish structure, and then what would we see after that? We had a retracement. I'm actually going to change this color to red. So we had a retracement coming back into the previous structure. Look left, and then the market rallied, but we did not create a new structure high. Had we created a new structure high, then you can see that this market is bullish, but we didn't do that. We came back down into that point, and then what did we do? We created a new structure low. Previous structure, new structure low, even though we still haven't broken this previous outside return. So technically you would still expect this market to continue going back up. So we had another rally. Again, we didn't even break the previous structure lower high that the market set. And then what happened? We came back down, double bottom, and then the market rallied, creating another lower high, excuse me, lower high, lower high, lower high. But what you would notice is we had a bullish structure right here. Starting point, new structure, initial structure low, outside return, new structure low. That gave us a bullish bearish structure. So a bullish structure followed by bearish structure. The market rallied, came back, formed a double bottom, rallied, and then the market tanked, and we violated all of our previous structures. Looking left, 1, 2, 3, 4. So now looking at this, the market formed a bearish structure followed by another bearish structure. Now we can say that the market is bearish. This is just simple technical simple structure reading. So violating these structures, now we can say that the market is bearish. So this is what the, like, being able to look at the market on a higher time frame and being able to establish what the trend of the market is. Just simple structured reading. Like, there's nothing too technical, nothing too hard for you guys to understand here. So now that we've established that the market is bearish on a higher time frame, this is what we do. It's called top-down analysis. So we're going to drop down to a lower time frame. Obviously, I started on a weekly time frame, so we're going to drop this down to the daily. Actually, before we do that, I'm going to try and mark all these structures that we violate, because they could be very important in what I'm trying to show you guys today. So I'm going to bring in my horizontal line. This is the previous structure that confirmed all this the bearish trend. We had, I'm going to just put a line there to just mark the previous, where the market formed the double bottom, and that's another structure place. So I'm going to drop this down to the daily time frame. So we know that the market is bearish on a higher time frame. So looking at the daily time frame, so the first thing I'm going to do, I mean, if you look at the daily time frame right now, if you just look at this section of the market, it doesn't take a genius to know that the market is just random right here, or what we call sideways market or consolidation. The market is in consolidation over 70% of the time. So it does that. You're going to see a lot of this. If you're looking at charts, you're going to see a lot of this junk. You know, it's just totally, it's random. But obviously, if you're an advanced pattern trader, this is like, I don't know what you're going to call this, but this is like, this is what you look for in the market. You enjoy these types of situations. But anyway, back to the point I'm trying to make. So dropping this down from a weekly time frame, seeing that the market is bearish, dropping it to a daily time frame, seeing that the market is in consolidation right now. So the first thing I'm going to do is I'm going to try and mark up the consolidated channel through. Okay, this consolidation is going to coincide. The top end of the channel is going to coincide with this previous structure that we had. So I'm going to put another line there. So we can see within this channel that the market is in consolidation. But knowing that the market is bearish on a higher time frame, I mean, the first thing that we need to try and because the main thing is you need to try and construct your trading strategy based on what the structure of the market is. So if we can find a bearish trading opportunity, a bearish trade setup, it would be a very good trading opportunity. Why? Because we know that the market is bearish on a higher time frame. So, you know, and being all on the side of the trend is always helpful. I mean, you heard a lot of people say the trend is your friend in the forex market, and that's what I try to show you guys. I mean, probably every trade setup that I'm gonna show you guys is probably something that's gonna be aligned with the trend, with the market trend. But obviously, now that we're in consolidation, let's try and see if we can find a trading opportunity that's gonna you know help us get on the trend. So the first thing I'm gonna do is, now that we know that the market is consolidation, first of all, I can see an advanced pattern here, a bearish advanced pattern, and it's a godly pattern. So I'm gonna go ahead and show you guys. So looking at this the highest high at the top end of the consolidated channel, X to A leg, what did we see? A 618 retracement. So straight away we know we're looking for a godly pattern. For a godly pattern, I use the 127 extension. Some people use the 886 retracement of X to A leg, but I use the 127 extension of the A to B leg. So bringing in my triangle, let me draw it for you. So X to A leg, A to B leg, B to C, and C to D. We have a godly pattern that's going to terminate near the top end of that channel. It's a bearish godly pattern, so it's a very, very good trading opportunity. So the next thing I'm going to do is, my aim to is to show you guys various trading, the various ways you can play the market. I mean, there's no wrong or right way to trade as long as you have a strategy that can be tested, repeated, and verified. And this is one of the things, like I said, the market is in consolidation. I'm an advanced pattern trader. This is the kind of trades that I usually take, because it falls perfectly with my trade plan. But it doesn't mean that it's going to be a winner. So we've seen that. This is the first trading opportunity, the first trade setup that I'm going to show you. So the next thing I'm going to show you is, if I bring in, I'm going to show you guys a harmonic move that is going to terminate. So we take this previous move. So I'm going to go ahead and clone this, put it right there. So what did we see? We see this market. We got a 1-to-1 harmonic move that's going to terminate right at that top end of the channel. And another thing that I want to show you guys is, if we bring in a Fibonacci extension, those of you that trade Fibonacci extension traders, I should show you guys the power of Fibonacci, obviously. So if you go for swing high to swing low, and back down, oops, did that wrong, swing high to swing low, back down again, what did we see? 161 extension coming in right at the top end of that channel. Swing high, swing low to swing high, and back down again. The previous move, Fibonacci Confluence, 161 Fibonacci extension, 141 Fibonacci extension, all terminating right at the end of the harmonic move, a 1-to-1 harmonic move. And what do we know about this blue line that we just drew from a higher time frame? We know that this is a previous structure that the market violated. And what do we know about technical trading? The market loves structure. So now, I mean, it depends on what you want to do. It's up to you. Me as an advanced pattern trader, I would be looking to take this advanced pattern trade. Obviously my stop loss is going to go above X, and just at the point where our X is, we've seen a couple of Fibonacci confluence. We've got a harmonic move that's going to terminate it right there, and we know that the market is bearish on a higher time frame. So this is really a very good trading opportunity with a high probability of success. But it doesn't mean that it's always going to be. I mean, don't be surprised. The market might just come back down. I mean, like I said, the market is in consolidation right here. We've seen a lot of times. It's not always that the market will reach the top end of that channel. But yeah. I mean, this is what building a case for entries. You're able to build a case for entry and just wait for the market to get to that point where you can take advantage of. So anyway, this is all I'm gonna show you guys today. So anyway, I'm back to my signal service, which has been I think we are in a drawdown currently. But obviously one of the things that I try to preach as a trader is transparency, really. So what I would say is, I mean, you're probably not going to see a lot of traders showing you the bad side of their trading, but like I say, it's all about transparency, because I know a lot of people have come to realize that trading is not really, or have come into trading with the expectation that they're just going to be winning all the time. But it's not the case. You are going to go through losing streaks. You are going to go through drawdown. In fact, every single professional trader goes through them, and yeah, I'm no different. So I'm going to show you guys the result of my signal service. I hope you're going to close your eyes, because it's been bad. I mean, it's not that bad, but it's been quite bad. So let me bring in my Excel spreadsheet. So obviously last week that I didn't put out a video, we ended up having an okay week. Obviously the previous week was a very bad week, as we lost I think we lost, what was it, yeah, 154 pips down on that week. And then last week we had we continued that losing streaks, we losing 5 in a row, and then we had a big winner on the Aussie dollar back pattern, bringing us, giving us a break-even week. And then this week that I just finished, we took a hit again, a couple of losses, a one target winner, and we're still waiting for our Aussie dollar cipher trade. But obviously just try and reflect back on this week's trade. I'll show you guys the first trade that we took with the US dollar CAD. Was a bad pattern, So let me go ahead and show you guys. Yeah, that was the bad pattern that we had. The market, completed the bad pattern at 1.2900. So let me show you guys what happened. If I can go over to, it wasn't on the 1 hour chart, so USD Canada. So yeah, this is the bad pattern that we had. As you can see, the market came, triggered our entry, but then hit our stop loss, giving us a huge loss, really, 95 pips. But yeah, took down on the chain and move on to the next one. So the next trade was another losing trade as well. Australian dollar against the Canadian dollar. We had a bearish cipher on that one, which yeah, that's the one. So let me bring up the chart, and that one was a 30-minute chart, if I'm not 30-minute time frame. Yeah, this is it. We had the market came back, triggered our cipher, but then it never looked back. It just went straight and hit our stop loss, giving us a small loss of about 36 pips, I think. Yeah, 36 pips. And then we had a target one win on the euro yen. It was a bullish Gartley pattern. So going back again to the euro yen chart, there it is. Yeah, so the market came back, triggered our entry. We nearly we went more than halfway through our stop loss, and then we had the market rallied, gave us a target one winner, and then it went back down and took us off on break even for our second target. So yeah, as you can see, these results, I mean, it hasn't been anything, but it's been a lot of grind. I mean, if I just go back up to where we had our best week to date in my signal service, where we had a 400 pip winner. In fact, if I even take it back to all the way back, we can see that, I mean, the first 6 weeks have been nothing short of incredible. I mean, we only had like a small losing week, but we had very, very good good weeks. But then obviously it's not gonna last. I mean, this is trading. Like I said, if you know what trading is, this thing's not last. I mean, you're gonna go through, you are gonna hit a rough patch now and again. It's gonna happen whether you like it or not. I mean, it's not because your trading strategy doesn't work, which is what a lot of people see, come to believe. It's not because of that. I mean, average trading strategy is only gonna win, have a winning percentage of about 60%. So if you think about it, if you're gonna take a lot of trades, if you're gonna take hundreds of trades, you can expect to lose quite a lot. And sometimes those losses are gonna come in a single string. Like you can lose 10-15 trades in a row. It can happen. But at the same time, if you do that consistently, keep repeating your strategy consistently, in the long run, you are gonna end up on the winning side. I mean, so after the great week that we had, we went to another week where we didn't take a single trade because simply all the patterns that we had didn't complete. So we move on to the next week, and we took a huge loss. That was our worst week to date, where we lost 154 pips. And then the following week, we took a breather. I mean, we just like break even just to steady the sheep. And then last week, we took another couple hits. So if I look, switching back to our equity curve, you can see what is happening. We're on to our all-time high of about 12% returns, and then we took the 154 pips, 3% drawdown, break-even week, and then we continued down. Now we're on about, I think, 5% drawdown, but still looking at the overall picture, we're still up over 7%, 7.5%. But these things are gonna happen. It's not the first time. It's not gonna be the last time. It's gonna happen now and again. But what thing you can bet is that every single time, the trade that we're gonna take is the trade that falls into the plan. Is a trade that meets the rule. So, heading back over, what else can I show you? Yeah, just to look at the patterns that we've been trading. I mean, the cipher pattern, because we took a couple losses, so our winning percentage on the cipher pattern is down to 54%. And for those of you that trade advanced pattern, you know, in the long run, all these percentages, they're going to be around about 60%. I mean, currently the bad pattern is the only pattern that it's not really performing, but it doesn't mean that it doesn't work. It just means that, you know, these patterns, they go through rough patches, they go through losing streaks. They are going to happen every single time. So yeah, winning percentages, I'm still at 50%, and we're still 7.5% off. So anyway, like I said, we'll see what this week is going to bring. Not every week is going to, I mean, I'm hoping this week is going to be better than the last one. But the good thing is I'm not going to do anything different. I'm still going to do exactly what I always do. Wake up, you know, go through my charts, any pattern, any trade that meets my rule, I simply take it regardless of what the previous outcome was. I mean, because that's what it takes to be a trader. I mean, that's what you should do as a trader. If you have a system, a strategy that works, you come into the market, you take a trade regardless of what the previous outcome is. I mean, you could have lost 10 trades in a row, but if you moving on, you come across a strategy that meets your rule, you take the trade regardless of what the outcome of the previous trades were. You simply just don't stop. You simply just don't quit. You know, because we're trying to build. It's all about consistency. A lot of traders are going to trading is about consistency. You have to be able to consistently follow your trade with your rules. But the good thing is we are getting results. That's the main thing. And this losing streaks or the drawdown is going to end. Eventually, it's going to end. But the good thing is, like I told you guys, it's all about transparency. I'm gonna come in here, regardless of what happened. I'm gonna show you guys. You know, there's no hiding place here. I'm gonna show you guys the bad and the good. It doesn't. You know, I wanna be able to reach out, because like I said, there's a lot of people out there that you know believe trading is just some magic way of making money, but it's not. It's not like that. I want to show you guys that you are gonna see the bad times. You are gonna see it. And I'm gonna come here every week and I'll show you guys the results, bad or good. I'm gonna show it to you guys. But obviously, the main goal, like I said, is all about the long-term goal. Really, at the end of the year, we could be sitting here, you know. If you guys remember the calculation I did on in terms of the winning percentage, you know, and how that's gonna reflect on what the results is, long-term results is gonna be, then you are gonna, you know, you are gonna see it. So, so like I said, this is it, guys. I mean, we'll see what happens this week of trading, and I hope you like the technical analysis I did on the euro dollar. And yeah, so that's it really. Thank you guys for watching. If you like what you see, as always, you know, just leave a comment, you know, and then I'll see you guys next week. So yeah, have a good trading week. Yeah, bye.